Good evening. Ira Epstein with your Spider ETF wrap-up, and this wrap-up is for the evening of Monday, the 23rd of May, 2023. Big up day in the stock market, held on to the gains most of the day. After the market, we saw that Zoom beat the earnings. Snap got smashed. It wasn't a snap, it was a pop, crackle, snap, down 22% as they're missing their earnings. This market's quite fickle. You miss, you don't miss, and it's pretty rough. Now, I want to remind you, you get big rallies on a Monday. According to the Stock Trader's Almanac, your horn should come up because it's often fraught with Tuesday reversals. We'll see if that is, in fact, the case. I looked at Zoom and I figured, hey, why don't we take a look at it? Because this was a high flyer during the pandemic and it has just gotten itself smashed. It's certainly down 50% in value, trying to find an area here for support. The pattern on the chart is that right now, trying to find it. If you notice, you're going sideways. When's the last time you saw this kind of action? It's been a while. So it's attempting it. It doesn't mean it will succeed. But if the market can finally clear up here, the 94.85 area, without breaking through these lows, it will be constructive. Why? Well, that could put you over the 18-week average of closes, and you have failed there each one of these times. So we tried one time to get up here and build something. That was your failure. And because it had come off a low, it's not quite the same pattern as this is. That does not mean it's yet a bottom. I can see the resistance at 94.38. From here, that's about $5 higher in round figures. The aftermarket was up about $5.50, so that'll be an interesting morning rerun in the morning when we come about. In terms of Bollinger Bands, you hit them back here, you hit them here, and you move to the right. This market likes to stay within its bands. It doesn't like to poke outside of them. So as you can see, that's interesting too, and bearish. And the market has been going flat. It is not in an oversold condition. It is in the 30s on both numbers. When you're in the 30s, you're not oversold. So that could give you a market that wants to give you a bit of a bounce here, but will the pros wait and sell this market? That's going to be the big question. And here's the unknown. While the pattern is lower highs, you also have higher lows. You see these two? So you're narrowing in like that in the market. Very interesting chart. Can the market do anything on its own if the general stock market falls back? Because this is a nice rally, but rallies haven't been holding in this bear market that we're in. I wrote about that, by the way, in my current report that I put out today at 11:30 in the update, my full research. And I went back and I had looked at some Bloomberg charts that go back to 1970 and how big the corrections were each time in the markets. And you've had 4 of them since then that were in the 20 to 27% range. The others are certainly well out of that. But that tells me that this is more, if you look at the total amount, this encompassed about half those big breaks from those years that you had 20% or more. And this is the norm. That's all that it is. Doesn't mean it can't extend outside of the norm. That's what we don't know. If you're watching people like Jamie Dimon from JP Morgan, if you're watching Tom Lee today out of FactSet, you saw that they are on the friendly side of the market, thinking the investors got money in the bank, they can withstand this, that the labor market's going to stay tight. Where things get unraveled is very simple. If the labor market doesn't stay tight, then what happens is the wage pressure comes off, inflation comes off, but then you're not paying up for the wages. Does that support the market? I don't know, but that to me is a number that I think you have to watch is now labor. Very important element. AMC just can't get out of the way. You know, I'm not a fan of the movie stocks, but I can understand the argument that the market might want to break out for the summertime blockbusters it's going to get. I think tomorrow in some theaters, the Maverick movie, as I like to call it, you know, we're going to get that again. Then we're going to get a little later the other Jurassic Park and some of the others that come out. So we'll see if the old movies that have been in the can, I call them old because most of these movies, like Top Gun's been in the movies, in the can 2 years as I understand it. Jurassic Park about a year because of the COVID. So they're coming out hoping to take Doctor Strange and strangle him and get rid of him right now is the big box office movie. We'll see what happens. But you can see the resistance is the 18-week average, and that's the battleground. In Apple, each time we've hit the Bollinger Band, you've got to bounce. This is totally within that realm. This is not bullish action. It's just nothing action. The market lays down. It refuses to get away from this oversold area. It doesn't embed. Follow me. Day one, nope. Day one of embedding. Day two, didn't embed, as you can see. So it refuses to embed. It just stays in oversold territory, and it keeps going back to the lower band, which keeps dropping on you. Last week, this band was up here in the 139. Then it finally got hit in this area here. And you can see it finally hit it at 134.79. So that's a $5 drop. If it drops again, that band will drop. I promise you, probably closer to 131 before you know what's going on. In Disney, unable to get much done. The government is looking, the Biden administration today, they're looking at releasing heating oil and removing some of the federal excise tax on gasoline for the rest of the summer. Why? The idea is to take the burden off the taxpayer, but the real idea here is election votes. Got to act as though you're doing something in order to get, when the midterms come, that you give your candidates something to really talk about, because so far nothing has been working. I don't know that that's the right thing to do. You lower the price of the fuel by that, will people just say, hey, let's go out and they actually use more fuel that we don't have? That becomes the biggest problem. You know, using 1 million barrels of heating oil. Okay. What does that do at this time of the year is first question. Jet fuel is what I'm really looking at. What do you do with that? That's where the market needs things. Saudi Arabia came out in the afternoon, and they were really critical of the United States, rightly so. We're not doing much in the way of production. And their prediction was interesting. They said, if this conversion to green doesn't go as smooth, and so far it's not via the pricing you're seeing, you watch. You're going to get the worst thing. You're going to get coal. And we're already seeing that in China and other areas. That's the terrible pollutant, so be careful. When you get to XLF, here's what happened. You had an outside day to the downside on Friday. If you take out the high of an outside day down, often you make a run to the closest main moving average, or the Bollinger Band, the closest of. Well, that's exactly what you did. It doesn't have to go any higher. It's now met its obligation. It's still oversold. It's been unable to get over that number. And you're going to see that market upon market. They're having troubles getting back over these 18-day average of closes. That's what a bear market is. And while people say, well, you know, the Fed's not going to have to do this or that, let me tell you what I'm seeing, because I'm just an average guy on the street. I don't see inflation falling yet. Where do you see it falling? What numbers are you seeing there? Because I live in Chicago. I haven't seen gasoline prices come down. I'm getting my bills every day in the mail. My electric bills are up. My gas bills are up. My food bills are certainly up. I don't know what they're talking about. I think there's a lot of wish and hope and prayer that, hey, the inflation will slow down and things will get going. Well, you need China to produce more goods for that to happen. But the first step when they do that, slightly inflationary, because they got to buy more material to make those goods. They've been using what they call on their docks. And if you look at the numbers of the supplies there, everything that makes steel and things of that nature, they have been coming down on the stocks. They're going to have to replenish that at higher prices. This stuff's not cheaper. It's all higher. That's going to get passed on to us as they fill the supply chain. We're in sort of this spiral that I don't think is easy to come out of. In the semiconductors, you're sort of stuck in the middle of no man's land, just stuck at this 18-day average void of a trend. In the home builders, we're going to get more numbers, I think, in the morning on home builders. I can't imagine that these numbers are going to be great. The average home is expensive. The mortgages have gone up. The people that can go in and pay cash for a house, they're a different breed than the average guy out there. You know that. I know that. The $2, $3, $4 million homes, which are expensive in most areas of the United States, those are what? They're going, if somebody wants it, they put together the deal. Forget Los Angeles and New York, because that's funny money. But when you look at the rest of the country, that's what's going on. But the moment you step away from that into jumbo mortgages and the like, there's pressure, a lot of pressure on buyers. So we'll see what happens with these home builders. In the XLE, the energy sector, you are maintaining an overbought status, sort of stuck between the upper Bollinger Band and the 18-day average of closes. The trend remains up. In order to break it, you'd have to get back under 79.86 in order to break through all this. That's the last break low. That could carry you back here. But is that going to do it? I have my doubts about it. In gold, when we lost the embedded reading, if I can't show it, I forgot to do that. I know what this is, and I just didn't save it right. You lost the embedded reading right here, which was here. The objective was the closest moving average, and it went to the 200-day. I said to you, I think very clearly, to get the great news out of it, it would be nice to get to the 18-day average in red, which it did today. By every stretch of the imagination, it's gotten up to where it has to go. Now it's in a resistance zone. When it's gotten here, on the break, it tried to hold it. So I have to assume that on the rally, it tries to fade and not be able to stay over it. Let's assume I'm wrong. If the market goes up, the next resistance is the 100-day average at 175.85, then the upper Bollinger Band. Right now, going home at the close of 172.83, that is over the 18-day average of 172.77. The bulls have control of this market going home, and they maintain it until the market gets back under 170.89. Upside targets clear. GDX, you're in serious resistance. The combination, again, of a 100-day average to 200-day average. Here, too, you had lost the embedded reading right here. And when that occurred, I said, well, the odds favor it's going to make a run at the main moving average. That's the lost embedded course that I teach you all. And that's exactly what the market has done. Again, see, I didn't lock everything in, so everything's moving. In COPX, we have a pattern of higher lows, higher highs, back up to the 200-day average. I know that I prepped you for a long time as we were coming down, and I said, when China says in Shanghai they can get back to normal life and they start releasing a plan, it would never have been on day one. The market would gradually, and I use the word gradually, it's not going to be all at one time because you've got to get things in motion. Look what's been happening. This is called Dr. Copper for a reason. It's anticipating that industrial demands will pick up not just from them, but for the components they make and send to America, Europe, and all the other markets they export to get the whole chain of industry moving because we're missing so many different component parts. I know I was waiting for a part last week. It was honestly got a conduit clip. I'm handy. I'm able to build things and do that. And during the markets, I'll take a half hour off every now and then and just go do something to get my mind out of it. I'm home, so why not enjoy that? And I had to wait for a quarter-inch clamp to come in. 2 weeks. I said, where is it? China. Okay, interesting. And an everyday clamp. It was strange. I think it was 3/8 inch, actually. In looking at the AGG, I've moved from TLT. Let's just look at the other ones every now and then. You have a lower low, higher high, overbought. Will you be able to get up? I told you this in TLT, and I'm going to say it in AGG. The market has this market's back. This and all the instruments, it's going to raise interest rates. Don't go buying all the analysts that look at each piece of data, and they're all going to be forward thinking and think, well, the Fed won't have to do this or that. Here's my thought on that. The Fed has to get ahead of the market. They blew it just before when they thought things were transitory. So did many of us, including me. They blew that. I thought that the market would not get this hot in the inflation, and neither did they. On that basis, they can't afford to be early to come away from it. They have to overshoot with getting tight. So I'm of the opinion that they're going to have the back of the bears and not the bulls in these markets. On UUP, which is the dollar index, we've broken back because of what? What caused this to happen? Oh, I know. Gee, stupid me. A number of foreign currencies going up against the dollar because bank after bank is raising its rate. In the FXE, we have a market that is short, taken off to the upside, and here you go with the market at the upper Bollinger Band. It's the flip-flop. Now, I had a question. People were writing me about the ruble. I was laughing because I don't know if people read. How could the ruble have gone down after the 130 level when Russia put in all the price controls? There's no selling allowed of that. There was no selling in the stock market allowed. There was no conversion of your money, your rubles, into dollars or euros other than, I think, at a 6-month period, $10,000 that you could take out. That's not going to impact the ruble. And because Europe is so in need of Russian energy, a concoction was devised to keep the sanctions in place where they said, well, if we're going to buy Russian goods, we're not going to pay in rubles. That's not what the contract calls for. Remember, Macron brought this up from France and many other countries. So what was worked out is a way to say, we're sanctioning you, but we're going to pay you. And that was the Gazprom Bank is able to take money for energy, and on that money, they internally convert to rubles, and the companies are paid in rubles. So Putin's got what he wants. The European Union says, we never paid in rubles. We just paid in our dollars and our euros, which they did, and everybody dances around that fact and has the energy and the lights on in Europe. It makes sense. I'm not knocking it. You have to have something. But as Gazprom is sitting there in a domestic market getting in this money and having to give it in ruble form now, and that's basically what they're doing to their energy people, and the money's trickled down, it puts buying pressure on the ruble. You still can't go short the ruble. That's only going to start, I think, June 1st or something, where traders can actually do something and convert back into other currencies or investors. So it's pretty easy to see it's a one-sided market. So if you think that, hey, it's gone up and it's because the Russian economy is so good and strong, okay, there's a Brooklyn Bridge that sells shares in it and other bridges in the country. You should look into those because those are also very good investments for you. I'm Ira Epstein. I want to remind you that we do put together a series of indicator series for you. The Arun indicator is one. Let me explain why I like it. This is the only indicator that I know that measures price momentum with is the market extending the gain or loss that has been happening. I like that. On a bullish, it's saying, the market's continuing on time and price to advance forward. But when you start getting this market turning away from it, one way or the other, it sort of gives you an indicator, innately things are changing in the market. It's worth looking at? Sure. How do you get it? Because it's a video series that we've put together for free. Just go to our website under free offers or follow my finger. Just go up here. You'll see a cursor. Give it a click where you see the free offers. You can get that, the pivot point series, everything we've got. I'm Ira Epstein. You have yourself a great day, and I will talk to you all tomorrow.